Master, whoa, ouch. If you are busy, just listen to the first part of the firm offer. Part of the share operation can be detailed explanation. Part of the free time you listen to ha. 4 of the strongest stocks traded on Friday, TSM_MU_MSFT_FCX. 4 stocks always have 1 to 2. Just you dare to participate in small trading. We only share their trading experience, only as a reference. You are responsible for the safety of their funds, trading at your own risk. Remember that we are short-term day trading, strong stock style. Do not do long-term holding. Before closing, must sell all holding. Short-term trading mode. Remember to remember. Buy and sell. Buy and sell today. MSFT buy price range. Buy at any price between 452 and 453. Sell range. Sell at any price between 464 and 466. Buy and sell today. FCX buy price range. Buy at any price between 58.3 and 59. Sell price range. Sell at any price between 60.1 and 60.4. Note, the Quad Pipeline program has been broadcast live every trading day for 6 months. We should understand the strength of our firm trading profit curve and share the strength of buying and selling strong stocks in the future. This is very, very important. The show has been live for 160 episodes. After watching all 160 episodes of our 12 traders will have a comprehensive understanding, and many people only watch a few episodes, see a few eyes on the closed. I don't understand the essence of the show. We've long stressed that platforms like Tubing and TikTok are mostly about knowledge. They're in nuclear power, chips, storage, silver, gold, copper, oil, and data centers are particularly good at knowledge level. They are long-term role models for us to learn from, but we don't know when to buy or sell. What's the position, whether to hold positions overnight, market highs and lows, and so on. This kind of intellectual things happen to be very few people share, and we 12 traders in the tireless sharing and firm offer verification. Both accounts have made about 30% in the last month compared with an annualized 90% last year. Watching a few minutes of an episode is like driving a part of a Tesla without mastering the beauty of the whole car, as you only live in 1,000 square meters villa other rooms and supporting functions you do not understand. How to solve this difficulty quickly? After a team of 12 countless days and nights of communication, the conclusion is, first follow the train of thought. Small warehouse operation. If you can often make money, then listen carefully to the detailed explanation shared that day, or listen again in the future. To tell the truth, there are many variables after the opening of the U.S. stock market, but the prompt price is in front of the market, which is not synchronized, just like killing corrupt officials with the sword of the former dynasty. But to provide trading points, these are very detailed content, need a lot of energy cost to deal with. Example, last night can know FCX and MU up, but also know what price they grow to. Long postures first high after the fall or high hit. The research effort had to be increased tenfold, which was costly, and customers had to pay for subscriptions. A good solution is, because my team of 12, to provide up and down code is the first echelon, to provide code up and down price is the second echelon of people, because this is actually 2 things. Up and down is the researcher is better at, up and down point is the trader has the ability to deal with, may not be accurate. High demand for U.S. stock enthusiasts. Attention, your artificial intelligence assistant American Stock Quadrangle serves for you. How will increased investment in Microsoft AI affect future earnings? Microsoft's MSFT, U.S. massive investment in artificial intelligence, AI, the impact on its future earnings is two-sided. A significant increase in capital spending in the short term and potentially a squeeze on margins, but the medium to long term is expected to drive cloud business growth, improve operational efficiency, and open up new sources of revenue to consolidate the cornerstone of earnings growth. 283,032. The following analysis with specific data, First, a solid profit base and significant AI input. Before assessing the impact of input, need to understand the company's current profitability. Microsoft had revenue of $281.724 billion in fiscal year 2025, ended June 30, 2025, year-on-year growth of 14.93%. Net income of $101.832 billion, an increase of 15.54%. 6. Earnings per share, EPS, were $13.64. With years of double-digit growth, this shows that the company has a strong basic disk and profit inertia. Meanwhile, the company's capital expenditure is rising sharply. The cash flow statement showed net cash flow from investment activities for fiscal year 2025 of -$72.599 billion, an increase of 25.13%. 9. This is in line with the company's recently announced $23 billion AI investment plan, including $17.5 billion for the Indian market. It has highlighted its strategic resolve. The information also pointed out that its AI spending last quarter greatly exceeded expectations. 30. The potential positive impact of AI investment on profitability drives the growth of the core cloud business. The most direct return of AI investment is reflected in the cloud business. Microsoft Cloud reported annualized revenue of $168 billion, 23% from a year earlier, with Azure revenue up 34%. AI workloads are a key driver of Azure growth. 30. The growth trend of cloud service revenue is an important indicator to observe this impact. Improve operational efficiency and generate new revenue. AI investment is used not only for external services, but also for internal efficiency. According to the information, Microsoft has saved more than $500 million annually in customer service centers through AI tools. Sales staff using Copilot saw their revenue rise 9%. 32. In addition, AI capabilities are integrated into products such as Microsoft 365, Dynamics 365, promote product upgrades and the growth of a number of paid users. Market and analyst recognition. Despite the huge investment, the market is optimistic about Microsoft's AI strategy as a whole. Of the 35 covering analysts, the consensus rating is strong buy, with an average target price of $629.01. The view is that Microsoft's lead in generative AI and its return on investment have not yet been fully priced. 33. Financial forecasts also show high expectations for revenue and profit growth over the next few quarters. 3. Short-term challenges and risks posed by AI investments suppress gross margins and short-term profits. Large-scale AI infrastructure investments can lead to higher costs such as depreciation. Company guidance suggests that Microsoft's cloud gross margin could fall 41% year-on-year as AI investments and businesses mix with Azure. In addition, strategic investments such as OpenAI are accounted for by the equity method, 2,930 in the third quarter of fiscal 2025, having a negative impact on net income of approximately $3.1 billion. Increasing capital expenditure pressure. A surge in net cash outflows from investment activities, FY 2025, $72.6 billion, indicates that the company is in a period of high investment intensity. This could result in periodic pressure on free cash flow, FCF, $71.611 billion in FY 2025, year-on-year decline of 3.32%. 5. Industry return uncertainty. Some information cited the views of consultants, pointing out that the AI industry by 2030 there may be a huge revenue gap. Tips on the possible return risk of aggressive investing. 31. However, some analysts believe that Microsoft's current AI investment has been able to obtain a higher return than the cost of capital. 40. To sum up, Microsoft's increased investment in AI is a typical short-term for long-term strategy. Financially, short-term, high capital expenditure, which may drive down free cash flow and cloud gross margin. Investments such as OpenAI can also create a significant paper profit drag. Long-term, to consolidate and expand its absolute lead in the cloud computing market, through AI to enable a full range of products to enhance customer viscosity and customer unit price, and fundamentally improve operational efficiency. Current financial data, such as cloud revenue growth, and business data, such as paying user growth, have initially verified the effectiveness of its path. Focus on the matching pace of its investment cycle and revenue. Profit growth and changes in market share in core businesses such as cloud services and the monetization of new technologies. This public information helps to understand the effectiveness of the company's strategy execution. Please note that the above analysis is based on open market data and information and is for reference only and does not constitute any investment advice. Second part, vomit roar, pay attention to listen. Your artificial intelligence assistant American stock quadrangle serves for you. How did the market react to Microsoft's AI strategy? Market reaction to Microsoft's MSFT US AI strategy was generally positive, but there were short-term differences. Professional analysts generally give high recognition and raise the target price. The stock price has fluctuated recently due to market sentiment, high valuation digesting, and concerns about the AI return cycle. The focus of the market is shifting from whether to invest in AI to when AI will be profitable. 151819. Stock prices and valuations. Reflecting long-term confidence and short-term volatility as of January 23, 2026. At $466.70, Microsoft, MSFT, US, has a market value of about $3.46 trillion. The dynamic P/E ratio, TTM, is 33.14 times 1. Despite the recent correction in stage lows, the high price-to-earnings ratio still implies a premium to its AI growth story. 19. Analyst consensus. Long-term value agency analysts who are strongly bullish on AI strategy are an important bellwether for market reaction. About 97% of the 35 analysts covering Microsoft have a buy or strong buy rating, with a consensus rating of strong buy, according to the data. Analysts have an average price target of $629.01, with significant potential upside to the current share price, with a top price target of $678. This shows that professional research institutions believe in their AI-driven growth path. Recently, a number of investment banks, including Goldman Sachs, Morgan Stanley, and KeyBank, have issued reports reiterating their bullish views. Goldman raised its price target to $655, arguing that margin expansion in Microsoft's AI business would repeat the cloud-era miracle of 1820. FABA Bank also stressed that Microsoft is in a leading position in the AI application wave, is the main line of software investment 21. The reaction and discussion of the core focus market from market information and earnings reports focused on the following levels: expectations and doubts about the process of AI commercialization. The market pays close attention to the landing speed of AI tools, such as Copilot, and the willingness of customers to pay. Information indicates that the discussion of corporate customers has shifted from whether to adopt to when to expand adoption, and that budget uncertainty is receding. But at the same time, concerns about sales quotas and the size of the realization have triggered 20 share price swings. Affirmation of strategic flexibility and risk diversification. Microsoft to promote the dual-engine strategy while deepening cooperation with OpenAI, increase investment and procurement in Anthropic, about $500 million annually, to spread risk and enhance the diversity of AI solutions. The move was seen by the market as a sensible Plan B. 22. Weighing huge investments against long-term returns. During the earnings call, management admitted to investing ahead of time to meet AI needs. This includes plans to double the size of the data center within 2 years, which could put short-term gross margins under pressure. The market is assessing whether this input for market strategy can translate into sustained revenue and profit growth as expected. Taken together, the market's response to Microsoft's AI strategy is both long-term optimism and short-term prudence. Long-term optimism is reflected in near-consensus analyst bullish and higher valuation anchors. The market recognizes its leadership and strategic execution in the cloud computing and AI ecosystem. Short-term caution is reflected in the stock price being highly sensitive to any news about the pace of AI revenue, and concerns that huge capital spending could affect profit margins. In essence, the market is waiting for Microsoft's AI strategy to translate more clearly from a capital story to a profit story. Disclaimer. The above content is based on public data collation, for reference only, does not constitute any investment advice. The market is risky and decisions need to be made carefully. Third part, vomit roar, pay attention to listen. Your artificial intelligence assistant American stock quadrangle serves for you. What are the details of Microsoft's latest AI announcement? Core conclusions. AI has become the core engine of performance growth. Strategic cooperation and investment significantly deepened. The latest information shows that AI demand is the primary driver of strong growth in Microsoft's cloud business. Companies are translating AI strengths into substantial financial performance by expanding strategic collaborations, doubling infrastructure investments, and driving full product integration. AI-related developments and announcement points to a significant upgrade and expansion of the partnership with OpenAI. Microsoft has valued its stake in OpenAI at about $135 billion, or about 27% of its shares. Long-term binding, the two sides revised their partnership agreement to extend Microsoft's intellectual property, IP, rights until 2032. Big purchase commitment, OpenAI has committed to buying up to $250 billion worth of Azure cloud services over the next few years. This long-term commitment provides strong support for Azure's revenue visibility. AI demand strong, direct drive cloud business surpasses expectations growth FY 2026 Q1. Microsoft Cloud revenue reached $49.1 billion, up 26% from a year earlier. Revenue from Azure and other cloud services grew by as much as 40%. Management made it clear that this growth was mainly driven by AI demand. Capital, a leading and aggressive capital investment firm to meet AI demand, said its AI computing capacity expanded by more than 80% in the quarter. It plans to double the size of the data center in the next 2 years. This led to a significant increase in cash outflows from investment activities to -$34.559 billion in the quarter, reflects the huge current costs of building an AI infrastructure. Product layer, full rollout of AI applications such as Copilot and start the dual engine. Strategic AI features have been deeply integrated into Microsoft 365, GitHub, Dynamics 365 and other core products. According to market information, Microsoft is pushing ahead with a dual-engine strategy for AI models. Relying on OpenAI has grown into a top customer for Anthropic, another AI company, with estimated annual purchases of about $5 billion to spread risk and enrich its AI solutions. 28. Financial guidance confirms the long-term nature of AI investments. Management anticipates intensive investment in short-term assets such as GPUs, CPUs to meet AI needs, will continue to impact gross margin performance in subsequent quarters. This confirms the market on the short-term profit pressure for long-term growth judgment. Its analysts interpret these developments. The information reinforced analysts' bullish stance on Microsoft's AI strategy. For example, Goldman Sachs believes that corporate clients' discussion of Copilot has shifted from whether to adopt to when to expand adoption. Budget uncertainty is receding and bullish margins in its AI business will repeat the expansion miracle of the cloud era. 26. FABA Bank stressed that Microsoft is in a leading position in the AI application wave, is the main line of software investment. 27. Disclaimer. The above content is based on public data collation, for reference only, does not constitute any investment advice. The market is risky and decision collation, for reference only, does not constitute any investment advice. The market is risky and decisions need to be made carefully.